Hello and welcome to this week's special presentation entitled How to Swing Trade in a Sideways Market. My name is Glenn Tompkins, Senior Instructor here at VectorVest, and it's my pleasure to bring your presentation this evening. Now, as we know, this has been a tough market to make money in, and you need a system that can get you in and out at the right times based upon market timing and a lot of other different things that we're going to talk about this evening. But let's talk about what's going on in the market. We've had a choppy market over the last year. What we're looking for are quick-hitting stocks, being able to get in and get out in a timely fashion. We also want to make sure that the stocks that we find have momentum behind them so that when we get an up call, we can quickly take advantage of those stocks. The goal is to get profitable quickly, and in this scenario, we're not going to be replacing positions. We're going to let them go, and when we get a change, we're going to go to cash. We're going to get into that a little deeper in a second. First off, let's get into what we can see visually on a market timing graph. What we're going to do from the home page is go up to the Graphs tab. From the Graphs tab, we're going to click on Stock, and we're going to go down to Market Timing. We're looking at just the price of the VectorVest composite, which tracks the move of over 9,000 stocks on a one-year graph. Again, over the last year, pretty sideways. But how can we take advantage of these upturns? Buying stocks with high momentum, getting out before they run down, and so on and so forth, back and forth. This is going to be a great technique for you to take advantage of a tough market. So again, we're looking to make sure that we have stocks that have momentum. We want to get profitable quickly, and we're going to use a search called the Midas Touch high RT or RT descending. Jim Penna did a great job talking about using the Midas Touch technique for finding gold stocks. Well, we found that it works well on stocks as well, and we're going to employ that technique. We're going to look at diversification, looking at a 10-stock portfolio, and again, we will not be replacing stocks. And the key part of this is using our recommendation. The stock has got to be moving from a buy going down to a hold. I think that is key, because we're looking for momentum stocks. If they move from a buy to a hold, the momentum in the stock is waning, and we're going to use that as an opportunity to get out of the stock. So now that that's set, what market timing are we going to use? We're going to use the DEW. We're going to change from the confirm call down below, put on the DEW. I think it does a good job of giving us opportunities to get in and get out. Get in and get out time and time again. And even when the market gets a little bit tricky and we get some whipsaws, I think the system will do a great job of mitigating losses and keeping you out at the right time. The search that we're going to use along with this market timing is going to be called, again, the Midas Touch. We're going to go to the Unisearch tool. From the Unisearch tool, we're going to go down to cherry picking. Here, we're going to find a search that says Midas Touch RT Descending. When we click on it, just want to look at the search. Price is greater than $1, average volume greater than 100,000 shares. The rest of the things that are here are to make them derby ready. But the stock watch list is equal to Midas Touch stocks. So now let's dive into a little bit more of what this watch list looks for. We make this watch list for you, finding stocks that meet the criteria of Midas Touch. We're now going to go over to the Viewers tab. From the Viewers tab, we're going to go to the Watch List Viewer, go down to Cherry Picking, and here's the Midas Touch stocks. You'll notice that as we maintain this watch list for you, finding the stocks that meet the Midas Touch criteria, we put them into a list for you so you don't have to go and find them. We do the work, you reap the rewards. Looking at this, 417 stocks. Now remember, the search that we are looking for uses this watch list, but we sort it by RT to bring the stocks that have the highest RT or the most momentum to the top of the list. Let's go back to the search once again. And when I run it, all right, now we've talked about where we get the stocks from. When I run the search, if I scroll over, look at these relative timings. Holy smokes, they're really high up there. That's where the momentum comes in. So we're looking at the Midas Touch stocks, but we're specifically looking at them sorted by RT to bring the high momentum stocks up to the top of the list, and those are the stocks that we're going to be taking advantage of. So let's recap this. Going back to our slides, the market timing is the DEW timing. All right, that's what we're going to use. The search is the Midas touch, but RT descending. Remember, we have the Midas touch watch list, but we're sorting so that we can get the momentum to the top of the list. From a diversification perspective, we're looking at trying to maintain a 10 stock portfolio, and the stop is going to be a recommendation not equal to a buy. So the momentum is starting to wane, and we're going to get out of them in a relatively quick fashion. All right, let's get right back into the software, and let's now go set up a back test to test this. We're going to go to the back tester. From the back tester, we're going to back test a new idea. So we'll click on back test an idea, and we're going to set it up. We're going to call this SOTW Midas. And from here, we're going to build a custom trading system. We're not going to use the confirm call, but we are going to use market timing. We're going to use the DEW. Let's go set up our rules long. On the upside, on the buy long, on the upside of the DEW, we're going to go to the cherry picking folder, and we're going to go find Midas touch RT descending. RT descending is going to play a role in buying high momentum stocks. On the stop criteria, we will use the recommendation, and the recommendation not equal to buy. So once we get into these stocks, one, they have to be buy recommendations. Once they are no longer buy recommendations, we cut or mitigate our losses very quickly. Remember, getting in and getting out quickly. More settings. We're going to try to maintain a 10 stock portfolio. We're not going to automatically replace closed positions. So when a position closes in an up situation, we're not going to try to buy more. We're going to take them for face value. They make money, we get out. If they don't make money, we get out. That's the goal here. We're not going to close any open position. Let's scroll down. Everything else will remain the same. Because we're not replacing, it doesn't matter about the repurchase. We're not going to be repurchasing stocks. But for the purposes of diversification, we're going to check the box for maximum stocks per industry, and we're going to drop that down to 3. No more than 3. All right. We're going to go over to the rules down, and on the rules down, we strictly go to cash. So on the up calls, we're buying high momentum stocks. If they start to wane in momentum, we're going to get out of them quickly. If they turn to a hold recommendations, and we're going to go strictly to cash once we get a DEW down. All right, we're going to click on finish. We're going to click on finish and run. Let's see how this works out. Okay, nicely done. Over a year, pretty much, that's been sideways. We've got 50% winners. We're up 31.7%, annualized out to the same thing. But look at this. The drawdown is less than 10% on a year that's been choppy. Wow. Let's go over to the reports. Let's go to a summary report. Let's break this down a little bit. 50-50, 30 winners, 30 losers. 50% of winners. But this is where the rubber meets the road. The best up position we had, or long position, made us almost $12,000. But by limiting, going from a buy to a hold, by mitigating the losses, the biggest loss was only about $2,500. That is amazing in a sideways trading market to be able to not only make, but hold on to your money throughout the time period. All right, that's just the last year in a choppy market. Well, let's go back to the market timing graph, and let's go back to prior to the pandemic. Let's go back to 2020. So the pandemic happened, big pullback in the market. The last up call we had prior to the big pullback in the market was on February 4th of 2020. Not an ideal time to get in the market, but let's take into effect what happened here, what happened along the way, even as the market pulled back and now moving sideways. How did this technique work out? We're going to go back to the back tester. I'm going to make a copy of this test. I'm going to right click, make a copy. I want everything else to remain the same, but I want to change the time period going back before COVID. So we're going to go down to the test period, down at the bottom. Click on it. I'm going to change my start date back to 2020. We're going to go to February, and there was the last up call before the big pandemic pull down. We're going to use that call or that date. So that's going to be from 2/4 of 2020 all the way up into current. We'll click on OK. Everything else is going to remain the same. Let's click on Finish and Run. All right. From 2/4/2020 to 5/11 of 2023. About the same amount of winners. Look at this. Nicely done. About 122% overall gain loss, annualized 37.64% with a max drawdown of 21%. Let me right click on it again. Let's go to the summary report. And again, I think it's going to help to emphasize the importance of the stop that we're using. The big winner here was XYF, up $22,000, whereas the big loser, TRT, was down about $4,500, about the same percentage of winners to losers as well again. So momentum plays a role, making sure that you're buying the stocks that have the high RT, gets momentum on our side. We get in if the stock moves from a buy to a hold, we get out rather quickly. And man, time and time again, that's a tough period to have been able to have made money. After the pandemic, though, the market took off and these high momentum stocks did their job. We made the money and we got out. And again, the recommendation buy to hold plays a significant role in being able to consistently get out, profitably get in, do it quickly, and get out and make that money. All right. Now, if you like what you saw here, how about this? Let's go to the Viewers tab, and let's go to the Trading Systems Viewer. How about this, folks? We have this now in the Trading Systems Viewer if you want to follow along. It is number 5 sorted overall by annualized. Midas Touch RT descending, prudent utilizing the DEW. Over the last month, up a little 6.5%. Down over the last 3 months, but over the last year, up 32%. Here's the equity curve on the 1 year look back or test, only 9.6% maximum drawdown, which I think is a really good way to go. But now from here, if you want the Trading Systems details again, click on Trading Systems Details, and it will show you all of those 1 month, 3 months, 6 month. It also will go down and break over for you the Trading Systems rules, what I did to set it up, the Midas Touch RT descending, recommendation not equal to a buy, and everything that I did to set it up is right here for you as well. So with that, folks, I think this is a great system to help you to make money in challenging markets. It's a great way to get in, get out, and use the power of the VectorVest program at your fingertips to give you the confidence to be able to know that you can trade in a sideways market. Folks, it's been my pleasure to give you a presentation, and until the next time, see ya.